Hello, good morning, welcome. This is Leonardo Azevedo speaking. I'm the Global CMO for Habber Tec. Welcome to our webinar about how to mitigate lending risk using BPM. We are very glad to announce that this is the first webinar we are doing on the UK. This is a similar initiative that we do in the other geographies where we operate. And it's something that we plan to do often in the UK. We normally organize our webinars in two big, let's say, set of subjects. One of them is more business oriented, so it's about the solutions Habber Tec normally builds to our customers, but with a business focus. And we also have one series of webinars that is more technical oriented. So we call it technical chat. So it's focused on the technical aspects of these technologies. So BPM integration, ODM, ECM, and so on. All right, so just to organize a little bit with you how we are going to work in these next 45 to 50 minutes. We will have space for questions at any time. So if you wish to make any questions, just send it by chat. So we are going to be aware of your questions. And of course, at the end of the session, we will also have a space for questions. All right, so our agenda, we have three big topics. The first one is to check which are the most important opportunities we see by using BPM on a credit process. We will put a lot of focus on the credit application phase, so it's not the full process chain of the credit process, but we are going to focus on this first phase where we have, the decisioning around the quality of credit of our applicants. So this is the point we are going to focus. And we will try to discuss a few points where BPM adds value to this process chain. The second point is really to take a more detailed look at possible architecture in terms of best practice of implementation. So we will look at some technologies that with BPM help implement a robust solution to deal with credit matters. And finally, we are going to share some success story. We've been working worldwide. Two banks. These two banks are very well known in Europe, and also we will edit an insurance company that has rules-based framework that is very similar to what could be implemented in the banking space, and then we end up with the question and answer session. So thank you for coming, and let's get started. So regarding the credit application process, the key idea is that this process is in the middle of a bigger process chain that of course comes with the customer or the prospect knocking on our doors, or we as banks knocking on their doors. So we are trying to bring them to register into the bank, sometimes open an account. It's not the same for every bank, but sometimes we have tightened to credit the account opening process. So it would be in the second level. But on the process chain, the second one is really the credit application. So it's the time where we receive all the data coming from this prospect/customer, and we add up all the data we can query on our own systems and, of course, on the market as well. And we will put some sort of analysis on top of this data and make a decision about the possible quality of credit of this prospect/customer. Sometimes on the retail bank, the credit, even on corporate or SMEs, the credit is directly related to one operation. So these two processes, credit application and formalization and disbursement, almost happen together. So we deliver one credit limit for a customer, and then it's immediately transformed into an operation. But of course, we can also work with a credit limit where this customer prospects can do multiple operations in terms of disbursement. And as we have this credit contracts going on, we need to manage this credit contract. For example, regarding collaterals or negotiating payments, or any type of action we need to perform in terms of managing this contract until it writes off. So that's the key idea. And in this process chain, our solution normally touches these three blue processes. So these are the most common ones, with variations from bank to bank, from business to business. So depending on the segment, depending on the region, depending on the operational model we have with the customer, we have variations on this process, but it's, in general terms, very similar as a process chain. And we have the support process, as I've already mentioned, the account opening or onboarding. We normally also have this compliance process and risk monitoring, collateral monitoring, that are also built on top of BPM plus some of the technologies we are talking about. So today we are going to focus on the credit application process, and we are going to detail some of these opportunities we have to work in this process and improve it in terms of mitigating risk and also gaining productivity. All right, first thing we can do with BPM, and it's very interesting how this brings a lot of benefits for the process, relates to consolidating automatically internal and external credit data, credit information related to this customer. So the key idea is that we have one screen with all the information that came from the process, the credit application, and also the external information we can grab through integration. For example, coming from Experian, coming from Equifax, coming from Call Credit, and all the credit bureaus we have in every market. So the idea is that we can join this information into one screen. And some banks, it's amazing how it's still done manually. So they grab this information from these credit bureaus and they build Excel spreadsheets to organize all this data. And of course, we have a lot of internal information related to accounts, related to the credit history, the exposure, the calculated rating, and so on. So the idea is that we can join all this information into as many steps as we need in the process. Normally, it's for the credit analyst. This is the one that needs to see this information But if you're talking about B2B banking, SMEs or corporate or other types of niche banking like rural banking, for example, also the relationship manager, the salesperson, he would be glad to have this information as he is preparing the credit application for the customer. So the idea is that we improve the quality of the decision and of the collaterals that are asked or needed to perform an operation with all this information typed together automatically. Second point where we see a lot of benefits in terms of improving credit quality is really having better document handling. Initially, it's kind of simple stuff. It's just to have a smart checklist that will fit the specific needs for every type of operation, every segment you operate. So for corporate banking and a working capital operation, what kind of documents do I need to collect in front of my customer to ensure that operation is reasonable in terms of quality? So that's the key idea here, is that this checklist, of course, is not fixed. It's going to be changing all the time according to our needs. And what we are seeing right now is a more advanced step regarding documents, is that we can also do some checks automatically by using external providers. So the idea is that as we have an image of a specific document, we can check, for example, if we talk about B2C, persons as customers, we can check their identity. We can do lots of things with documents, smarter document handling. And the other point that is related to compliance and changes from country to country, and sometimes it's very fast in terms of regulation, is that due dates needs to be managed too. So when we keep these documents in a document store, typically an enterprise content management system, it would be ideal to have due dates for these documents managed together with them, so that we can have update process that run automatically and get these documents as we need them. All right, let me check whether we have any questions. Okay, so just reinforcing that if you have any question, just send it by chat, and we'll be checking your needs. All right, so let's go to the third point. Third point regarding these improvements has to do with validation rules. This is also very, very interesting. So the key idea is that as we have a credit application form that is implemented in a BPM or in a more generic channels infrastructure to be delivered by mobile, by internet banking, by ATM, anything. We can have data entry validation being done automatically by using rules. So the idea is that if we evolve the credit policy, so our risk policy, our fraud policy, we will handle all this data automatically without need to change every single form that is supporting all the operation. All we're doing this regarding this implementation is really to separate all the validation rules that are behind this form in such a way that we have data entry on one side and validation rules on the other side. And we just keep here in the first level very, very simple validation rules like mandatory fields and all the other stuff. So combinations, things that needs to be filled if we have some specific sort of operation. We just keep all of these rules on a business rules management system that is really touched when the end user, independently if he's our relationship manager, if he's the end customer or prospect, he touches the submit button. So as he touches the submit button, we will do this consistency checks using the business rules engine. All right, next point has to do with decision level management. So the key idea is similar in such a way that, of course, it touches business rules, but we can manage different levels of approvals that can be very sophisticated in terms of series, parallel, independent, 2 or 3 approvals. So any type of approval can be handled on the BPM process that is going to handle all the approvals that are done on this credit application process. And continuing to talk about approvals, what we have here is that mostly on retail and sometimes on SMEs, we have a more automated decision-making process. So the idea is that we will have things like scoring or business rules applied on top of our all the data we have from the credit applications and the data enrichment I've already mentioned in this webinar. So the idea is that this rich set of data is submitted to the credit engine. So this can be lots of different credit engines we are used to work. ODM is one that we use a lot. And having all this information, we can score this customer first by using predictive analytics, whether it is credit scoring, behavior scoring, any type of scoring. And as we score them and we apply some rules, for example, scores less than 400 are denied, scores greater than 700 are accepted, and all the other ones will go to the credit analyst, so like it's shown on this diagram. And what we should work in terms of improving productivity while we continue to mitigate risk is that we have day-to-day improvements on the predictive models and on the rules, so that the ones I accept automatically and the ones I deny automatically are growing more and more in terms of their representativity. That's what we wish to do. So regarding the decision-making process, you can see that we can handle the, let's say, more human-based or judgment-based decision process that was shown on this screen, and also the score-based, so more automated, more statistical decision-making process. We can handle these both types of decision making for credit, and they are used in different situations, different segments on the banking space. The other piece that is quite useful and seems to be very simple is we can handle all the integration we do with the core systems. So most banks have systems that are oriented to products in general, or a set of products, and we need to send all this information that was kept on the credit application. So the effectively the proposal data, what was proposed in terms of a credit limits to a customer, what was approved, how they made that operation, and so on. So we need to integrate with the core systems, and we can do it point to point. So in terms of integration architecture, we can do this point to point, but we can also do it middleware based. We normally use the most known name is still Message Broker, but now it's Integration Bus. So we use Integration Bus to talk to all these core systems and store the necessary data in different systems. Of course, using the middleware approach, we also mitigate risk in terms of integration orchestration. So if we have to store information in more than one system, there is an orchestration running on top of this credit process. I need to register the customer in a customer register system, the operation in another one, money transfer in another one, and so on. And this should be seen as a transaction, although it's distributed. We can handle this on the middleware. It's safer in terms of the integrity of the transaction. Next point is related to branch credit and decision makers visibility. It's amazing how it's hard to track processes that are running on the chain. So it's mainly for the B2B banking. Retail is less frequent to have this tracking problem because it's pretty much automated most of the times. But for corporates or niche banking or SMEs, we still see this problem of managing the workflow, managing SLAs, and understanding where a specific process is stuck, why it's stuck, what is missing, what are the pending issues, and so on. So we can do a set of dashboards to track all this information, manage SLAs, and ensure that in terms of operations, we are doing the right job. And almost finishing our set of almost 10 improvement points for the credit application process. As I mentioned before, we also implement the supporting process that touch the credit application. One of them, and it's very important, is account opening. We have account opening on some customers running right now. Some of them are very, very, very fast in terms of business results for customers. So grabbing documentation very fast, doing all the checks we need, doing documentation checking, validating proposals, and all the stuff that is needed to open an account. We do this very frequently on customers, and also things related to compliance. So at least know your customer questionnaires, anti-money laundering, anti-fraud, so all these types of process that normally touch the credit application. And we need to coordinate them in such a way that if one of them is just stuck, we will only stop the other ones when it's really needed. So we can do things in parallel and gain a lot of productivity at this point. And the last one is kind of fun. And the idea is that we can handle exceptions in an organized manner. It's key to have this all types of exception handling rules pre-mapped so that we know the exception path very clearly, and we don't transform an exception in something that we do all the time, and we do in different manners. We just do it in a standard way, so it also mitigates a lot of operational risk, and sometimes it also mitigates credit risk. And this process is very frequent. So sometimes we do it also outside banking space, because exception handling happens everywhere. So these are the key points that we need to that we see as key opportunities for BPM to mitigate risk and to improve productivity on the banking space. All right, so as we move to the banking solution framework, I'll do just a quick pause just to check whether you have any questions. All right, let's move. So the next point is really the technical approach we normally take to implement these solutions. Let's say it's the big picture that we normally use. So you see on the left all the different systems, legacy systems that are inside or outside banks, so that are used by all types of banks. So you see here things like the bureau, credit bureau systems, the risk systems, the core, collateral management, all the stuff that is normally seen on the banks. The first thing we normally do, and it's now really key learning around implementing these solutions and evolving them over time is to put this integration level that is represented here as these blue squares of services that we do in integration bus or message broker, as I mentioned before. So we try to decompose these legacy systems into smaller operations by need. So we don't do this without having a functional need, and we decompose them into services so that these services are consumed by all the components that are on the right side of our diagram. All our end users that are on top of the slides, they will be touching all the time the BPM process, and we are seeing more and more a multi-channel approach for touching this process. So they are not all the time just using their web browser. They are using web browser, but they are also using mobile devices. They are using ATM. They are using, a different set of devices to consume this process. The relationship managers, for example, they are most of the times on the streets, knocking on the door of customers or prospects. So they need to have all these mobile needs, and they have to touch the internal process very fast, so that it's really going on very fast. So you can combine this personal touch in terms of customer service with a very efficient approach in terms of touching all this process. So as you're seeing, onboarding, accounts opening, credit application, formalization, disbursement, and so on. And the idea is that on top of all this process and touching all these legacy systems, we will have lots of queries, reports, things that will help understand where the process is moving. On the down level part of our slide, let's take a look at the components that will support all this process. So I've already mentioned to you sometimes during the presentation the rules engine. So this is where we are going to keep all the information related to policies. So the risk policy, the fraud policy, the credit policy, we are going to keep all of them into ODM so that we can manage them independently of the process. And we will have, of course, a typical database, so where we will keep the information, let's say the business store, for all the information generated by all this process. And we will have a document repository where we keep all these documents indexed by metadata, whether they were digital since their beginning, or they were effectively captured coming from paper to an electronic representation of that piece of paper that is going to be kept on this document repository. So in our experience, what happens is that when we arrive in a bank, we see some of these components in place, some of them not yet. And the idea is that our framework can complement different technical architectures in banks by analyzing what they have in place and by complementing their current architecture with these components. So these would be a brand new picture. So imagine a brand new one. We would follow this type of approach. And as I mentioned, on top of BPM and between BPM and the end users, whether they are internal or external, typically we are seeing more and more multi-channel level here, right? So that it can be delivered in different situation in different devices. So this is really the summary of what I mentioned to you, all these different elements or components where we have their functions of process, integration, rules, content, and capture, and the benefits. And the other thing that is very interesting to mention is that we can do this the business case for a bank when we discuss the project. So, for example, why should I implement an integration piece? And we are going to build a business case on top of typically the cost reduction for maintenance, the cost reduction, the reuse of assets, the biggest flexibility of business services, and so on. So the key idea with this slide is that we can look at your structure, your technological architecture. We can do an assessment. We can see which elements you need, and we can build a business case on top of these elements so that we show how you're going to benefit economically from the solution. All right, let's move to the success stories. First one of them is Rabobank. This is a long-term customer for us in Brazil. So Rabobank was one of the first customers to deploy a very broad infrastructure in terms of BPM on the rural banking division. It's very broad in the sense that it touches lots of processes inside and in all the processing, improving their customer service, and also improving by standardization their internal productivity, so improving the number of contract agreements they do, the number of disbursements, and so on. This is already very, very mature. So it's, as you see on the slide, it started 2009, so it's like six years project. The first rollout was 2010, by the beginning of 2010. So it's very mature. It was presented on IBM Impact 2013, the case, the success story. And we have lots of improvements here in terms of asset reuse, in terms of rebuilding process very fast comparing to the first time we did, all due to asset reuse and the approach we use. It's intensively used, and it's a very successful case. It's for a full division of banking business that is called rural banking. So it's delivering financial services to big farmers on the Brazilian agribusiness, and of course it happens in many geographies where Rabobank is. This specific case touches Brazil. Next one is HSBC. It's a different segment. It makes sense to mention to you. So this one is really B2B, and it's touching what they call middle office. So it's what they call it's a sales platform where about 800 relationship managers support their SMEs and corporate segment. It's not the large corporates for HSBC. So the credit application comes from the BPM and touches their legacy systems. In terms of architecture, it's very similar to what you've seen on 2 or 3 slides ago. The integration part is done by MQ. So MQ talks to their mainframe system. So there are huge legacy implementation, and the result is that when you reduce the amount of time all these relationship managers spend on the operational part of the credit, they have more available time to business activities, to devote to business activities. So the idea is that they can produce more and more business to the bank while they reduce operational errors and work. So the sponsor of this project was operations, but we also face a lot of benefits to the sales guys, to the relationship managers. Third one is Liberty Insurance. This one I brought to you due to the rules approach. So they're using the rules approach to automate pricing, so quotations for the auto insurance. Is very, very similar to the credit process, but it makes sense to mention because it's quite automated. And the other very interesting part is the way we manage that. So there are 80,000 different test scenarios built on top of this solution, so that they can check whether all the rules are correct or not. It was very fast to deliver this project in about 90 days, and it's very easy to simulate different conditions. So as they change their policies, they can see what happens to price and what happens to possibly acceptance underwriting policy as they change their rules. It's a very interesting project as well. So as we move to conclusions, I'll triple check whether you have any question before we jump to the last slide regarding conclusions. All right, let's go to the conclusions. So, just as a summary, the main drivers for quality and productivity gains in terms of this is applicable to banks, but it's applicable to other businesses as well. When we approach a process with BPM, the main drivers for quality and productivity gains are summarized on these four big steps. So path is one, in the way that I take a look at that process, and I just reduce process steps. I do improvements on the flow, and the wait time is minimized in such a way that handling over activities from the next agent on the workflow is very, very fast by using the BPM. The other thing is related to routing. So routing sometimes on the banking space, for example, for the credit analyst, I can route one credit application to a specific guy that has that skill or has that regional assignment. And the idea I can do this very automatically. It's very dynamic. It's very interesting. The human interaction, the example I used here was the first one when we sum up all the data we need, internal and external, for the credit analyst, so that he can have all the information he needs to perform the credit analysis without jumping from one system to the other. And also I can guide the navigation. So I can build very, very smart forms so that they know exactly what they do. We reduce training and so on. And the last point, I also mentioned a lot in the credit application detailed opportunities, is related to decision making. So the way we can improve decision making, we can make it more standard. We can put our own checks in the decision making process by using rules, by using predictive analysis, and by integrating this directly on the process. So the idea is that this can be handled together with the process in a very stable way, so that we can do all the improvements. All right, as we move to the last slide, I'll give you our contact data. Sergio Montori is the country manager for Habber in the UK. So here is his contact data. Sergio stays in London, so he's available for helping you to do these assessments, to do these business cases, to do everything you need to understand whether these solutions can be adapted to your needs, right? Okay, let's check whether we have any questions from the participants. Yes, we have one question from Danielle. So Danielle, thank you. Danielle is asking, are you going to share this presentation later? Danielle, what we do is we publish the webinar on our channel on YouTube and Vimeo, so that it's continuously available content for you. Thank you for participating. All right, so we are finishing. Again, thank you for participating. You can expect more webinars coming from Habber Tec in the next month in the UK, and at the end you're going to have a small questionnaire as you leave WebEx, and if you can just respond to this questionnaire, this is going to help us continue your support. Okay, thank you, have a good day.